to the channel, guys. Welcome back to Fortune Forex channel. And welcome back to episode 4 of Introduction to Forex Trading, guys. So in this episode, guys, we'll be treating a lot of things in this episode. In previous episode, we have talked about currency pair, where I explained a lot about currency pair, the major pair, the minor pair, and the exotic pairs. The example of the minor pair, I've said it in that video. But in today's video, let's move into MT4 interface. So that is the app we use to trade. So whenever we get a broker, we deposit to broker, a broker will give us an MT4 login or MT5 login in which to connect to the market, guys. So I'll be taking you through the MT4 and MT5 interface. So let's get into it, guys. Here is the MT5 interface. Here is what is the MT5 interface. Here is the what? Price scales. So here is the candlestick, and here is the 1 minute. This is how it look like. So I will do full video about it. I've already done it in my WhatsApp channel. So if you want to join the channel, the link will be in the description. How to set up your MT5. Just download MT5 or MT4 on Google Play Store or on your Apple Play Store. You'll find it there. MT5 is the new software, while MT4 is the old one, guys. So that's all about it. From there, you see the buy position, sell position. I've already done that. In it. So I don't want to take much time about that. So join, or maybe I will add the video into it in later in the days. But let's just move to something else. So here now is the candlestick, guys. So here is the candlestick about it. So here is the candlestick. This candlestick form according to the time frame, guys. So we are in 1 minute time frame. So this candlestick form according to the time frame. I'm coming, guys. So we are in 1 minute candlestick. So this take a candlestick to form, open and close in 1 minute. If it's 5 minutes time frame, like this, a candlestick will form in and out between 5 minutes. For this 30 minutes that you are seeing now, each candlestick forms in 30 minutes. I don't know what that's done. So in this 5 minutes time frame, this candlestick formed in 5 minutes, and so on and so on and so on. So I don't want you to get confused because there's a lot about it. So this is just the introduction to Forex trading, episode 4. So let's move into something else, guys. So now we move to pips. I think I've said something about the pips. Yes, I've said this that day. So what you call pips? So to me, all this is what we call price scales. We call it what? We call it price scales. So pips, let me write it down. PIP. So the meaning is just price in percentage. Pip, price in percentage. Like I said earlier, this is just the price pips. This is the price scale rather. So assuming now we are calculating for GBP/USD. And note, guys, that pips is just where we calculate our money, either the lot size and the winning size, and the profits, the take profits, everything based on the pips. So the pips is how much you want to risk, like how many pips you want to risk. Assuming I'm risking 10 pips, then we go to my FX calculator and calculate it. Okay, let me show you the FX calculator also. Okay, now assuming I'm risking on this Euro USD, now I'm risking 20 pips. Assuming I'm risking 20 pips on account of $5,000, and I want to risk 1%, in which I'm risking $50. 1% of $5,000 is $50. So I'm now risking 10 pips. 10 pips. Can you see stop loss pips? Then calculate. So it has given the lot size. It's given that my lot size should be 0.50. This may sound strange because of the lot size. You haven't heard it. So we are still going to do video. I'm still going to do video about the lot size, guys. So this is just a brief explanation about it. So I'm risking $5 and $50 on this trade. So my lot size should be 0.50, and pips value per lot size is just $10. So we are still going to know how much about this. So let's get back to the video of what we are doing, guys. So that's all about the pips. So let's now go to pips calculator. So any pair like GBP USD, so maybe Euro USD also, but any pair that has, as you can see, 1.3410. So if you want to calculate for this pair now, what are we going to do? A pair after the decimal point, 4 figure 3410. That's where we start our calculation from. Assuming now I'm adding 1 pips to this GBP USD. It may be buy or sell. So let's just focus on addition around here now. So I'm adding 1 pips. I want this value, this pair to move in 1 pips. So I will now add 1 pips to this. It may be 5. We have something we call micro lots, micro pip. This is the 4 pip around this. Risky is very small. So it's just we normally ignore it. We don't normally count it around the pips calculator. In pips calculator, we normally ignore this for this last one, the 4 one. So let's back to the calculation, guys. I said this GBP will move in 1 pips. So I'm adding 1 pips to this last one. When I say in 20 pips, in 10 pips, you can see it will become 1.3410. When I said I want this pair to move in 20 pips, just add 20 to this. So, and I said I want this pair to move in 100 pips, just count the 0, 1. Can you see now? That's just for the GBP. So let's go for USD/JPY, because that one is a special currency. We normally call it special currency. Let's take this our entry, like our pair calculation starts from. I said this pair wants to move in 1 pip. So this will be add 1 pair to this. We normally count after 2, just 2 figure after the decimal point. For JPY pair, it may be Euro JPY, it may be GBP JPY, it may be AUD JPY, whatever pair that has JPY. That's how we calculate it. Now for 10 pips, just add 10 pips to this 44, making 54. For 100 pips, add it to this, give us, it should be give us 1844, because we are adding 100 pips to the original, not 5544, guys. That's how it is, guys. So let's go on to gold, because gold pairs is different on how to calculate gold, guys. So for the gold pair, guys, if you want to calculate it, guys, so let's take this for our entry. Now let's say we're calculating for pip. So we start from here. A first figure after the decimal point. That's where go start some pips counting. So I want gold to move in 1 pip. So this will be 40. 5 pips. Just add 5 to this 4. That should be 5 plus 3. That should be 8. Not 5. It should be what? 8. Then we are adding 10 to this. As you can see, that's how it is. 200, 1000 pips. That's one and this one. So the next thing we are going to move into is bid and ask, guys. So I'm moving to what? Bid and ask. So bid, to me, a bid price, it simply means at which you can buy a currency pair. So let me show you the example of the bid and ask. So there is the example of the bid. Here's an example of so there is the example of the bid, and this one is an example of the I. You can see the last number are different. This is the bid, this is the ask price. So let's move again. So for the ask price, it's just the price at which you can sell the currency pair. So the ask price is what is at which you can sell the currency pair. Like I said earlier, here is the ask price, the low side, and the H side is what is the bid side. Don't get it wrongly. This L side, the lower side, is what is the ask price, while the H side is what is the bid price, guys. So let's move further again. Or let me give you some briefly example about this bid and ask price. So let me say that okay, a friend give you $1,000, a friend abroad. So he gave you $1,000, and you walk into the bank to exchange the money. So whenever you reach a bank, you normally see their rates. They may say, okay, as of now, let's say dollar is 1,500 naira randomly. So let's just put it like that. So and the bank manager will tell you that, okay, you came in with your hard currency. That means you came in with $1,000 cash. That is hard, like cash, not you haven't changed it to naira. So you want to change it to naira. So the man will tell you that okay, if you want to change in this $1,000 to naira, we are paying 1,500 naira. You are the sellers. You are the ask price, and this bank are the buyer. They are the bid price because they are buying that $1,000 from you, and they are giving you a rate that okay, if you are buying this from you, maybe you say that okay, I want to sell $1,000. Okay, now say how much? You now say okay, I want to sell it 1,600 naira, and they say no, we are paying 1,500 naira. So if you are good with that price, then you can sell it to them. Or if you are not comfortable with that price, you can just go to somewhere with your money, because in that transaction you are the ask price because you are the seller. They are the bid price. They are the buyer. Now you give them the $1,000, and then they give you that 1.5 million naira, and maybe 2 days or 3 days you went back to the same bank that I want to exchange this money to $1,000. The bank manager will not tell you that we are giving this $1,000 rate at rate of 1,550 per dollar. They have added 50 naira to that price, because in that case you are the bid buyer now. They are the ask price. That's how banks make their money. So those bid and ask price, they normally work for broker. So that's where the spread comes in. So the difference between bid and ask price is spread. That is why I said that spread is where brokers make their money. Whenever you open a trade, there is a spread that we trade normally go to losses whenever you open a trade. So that's where this bid and ask price. It's just the difference between bid and ask price. It's just spread. Now you giving them that. So for you to pay the each amount, so you are paying now is 1,550 times 100 and times 1,000. Definitely you are paying over. So they are making a lot of money from you now. So let me say, let's give an example of, they said we are not paying 1.6. They are not saying 1.5 again or 1.550 to make easy calculation. Previously they gave you 1.5 million naira. So in this case, you are paying 1.6 million naira. They just make steady 100k between that transaction. So that's where those brokers make their money, and that's where those banks make their money. I think we are able to cover 8 things in this. So let's stop for you guys. So see you in the next episode, guys.